Welcome back to the Teaching Tax Flow podcast, everybody. Episode 155 today. We are looking back in time, technically, but not really, because we're looking at the 2024 IRS Data Book. So if you're not sure what that is, we did one of these last year, so shame on you for missing that. But we're looking at that, we're looking at the one that relates to tax year 2024. But before we do that, as always, let's take a brief moment and thank our episode sponsor.
This podcast is sponsored by Reps Tracker. Are you a real estate investor who is bogged down with the huge tax burden? Real estate investing can open the door to powerful tax benefits. Reps Tracker can streamline the process of accelerating these opportunities. To take advantage of a special TTF community discount, go to teachingtaxflow.com/reps, REPS, and use the code IFG. Better yet, click on the link below in this episode's show notes to go directly to the Reps Tracker sign-up page.
All right, everybody, we are back here again on the podcast. This time, we're not talking about necessarily strategies, implementation. We're not really talking about all that today, but we are going to give you the summary. And I say summary is a very, very, very condensed version of the 94 pages of very number heavy, chart, graph, everything heavy IRS data book for tax year 2024. So, of course, Chris Picciurro, my co-host here, read every single word of this document, didn't you, Chris?
Oh, of course.
And you remember it all too, probably. That's the impressive part, right?
Oh man, this data book is very valuable though, and it's funny because in honor, September 30th is actually the last day of the fiscal year end for our federal government. So we thought it'd be appropriate. We did this for the 2023 data book. We're looking at the 2024 data book. We want to do it in honor of September 30th here. It was very well received last year, and it does tie in a tax planning and strategy because one of the 3 laws of tax planning, tax agencies are your involuntary business partner. Well, don't you want to know what your business partner is up to? What are they looking at? What are they auditing? Where are their revenues coming from? And this is really fascinating. And I think that this will spur some conversation in our private Facebook group, defeatingtaxes.com. Because again, you don't want to call them the enemy, but there's that saying, keep your friends close and your enemies closer. So let's take a look at what's going on.
It's kind of like
and this is all public information, I should say. Yeah, this is called Publication 55B. It's issued in the very beginning of summertime. But again, we wanted to hold on to this one as close to the fiscal year end as possible.
I almost made a joke to Chris about it being 94 pages and be like, I know you printed off this whole thing and read through it because you just got back from a trip to Minnesota. You were out there with the NATP, National Association of Tax Professionals. Yeah, professionals out there. They had a chapter event. So I know you had some transit time. So
absolutely. I had an honor of traveling last week to work with teach a 16-hour continuing education course to over 2 days. Don't worry, we didn't squeeze it into one. An awesome chapter of the NATP up in Minnesota. About 70 people attended. A lot of interaction, a lot of lively conversation. I finally have my voice back, so that's a good thing. My wife's upset.
Is it a good thing, though? I don't know.
Yeah, it was good when I had that voice. It's coming back. It was nice when that voice was gone. So it was an honor to go speak with them and present and it was I feel well received, and I truly enjoyed it. So I was up in the Twin Cities. I was expecting it was going to be chilly, but it actually was pretty warm, unseasonably warm.
Kind of like Michigan weather. You never know what to expect. At least with the data book here, we kind of know what to expect with the IRS, right? And that's something too, I think, we've touched on briefly in other podcasts and all that. If this is somebody's first time listening to this, let me kind of preface this with something that I was shocked of years back when Chris kind of enlightened me to this is, you're not always, you don't have to get a bill from the IRS and you're stuck with it, right? You can take ownership of that through tax planning. And that's a little bit what we're going to talk about. Chris, I like how you did mention that it is part of this because this is showing, where a lot of their resources are going as far as for like an organization, right? And their time and everything. So
absolutely.
There's cool stuff in here.
Well, let's jump into, and we're going to definitely touch on the audit percentages and what we think is getting examined more. Let's talk about tax collections in general. Over $5 trillion of gross tax was collected, and 54.2% of that, about so over half of that, is coming from individual income tax. So U.S. taxpayers like yourself, myself, people listening. About 32%, or a third, 32.6%, came from employment taxes. So remember, if you're an employee, you are paying in employment taxes, Social Security, Medicare, and then the employer's matching that. But if you're self-employed, you're paying the self-employment tax. So that's about a third. Then business income taxes was only about 11%. So remember, we have a lot of flow-through entities, S corps, partnership returns, single-member LLCs, that tax is paid on the individual or employment level. And then the remaining amount, which is a very small amount, would be a state excise tax and gift taxes. So that's less than 10%. So by far, over 50% of the tax paid are individuals. Another third would be employment taxes, which is partially individuals.
Right.
The IRS processed over 266 million tax returns last year.
That's a lot.
161 million of those are individuals. So that means that there's 105 million tax returns that are the IRS processed that are not Form 1040s. And the point is, when we think about taxes, a lot of times we think about the 1040, right? But remember, that's 160 out of the 266-ish million returns that were filed. There are a lot of other tax returns getting filed with the IRS.
And these are, I mean, I wouldn't say these are shocking numbers to me personally this time, because last year we looked at this and I think my jaw just continually kept dropping at the stuff that was in this. Because really, personally, again, I know there's a lot of it. I've never seen anything until the one we did last year that had all this on one sheet, right? And no wonder that I wouldn't say the push, it's the decision to go almost solely e-file is there. Because, we're talking 200 something million returns. We could get really nerdy one day and break down how many employees they have that are processing these and how much time they have per return to do this and all kinds of stuff. But we have better things to do with our days, right?
Well, think about this. When I first started in this business, we weren't e-filing tax returns. And now it's mandated for preparers to.
Well, you guys were making your own paper back then. Wasn't that called
Picciurro?
Picciurro?
We were cutting up trees in the back. We had a whole mill we set up. Smelled great. It smelled like sulfur. You ever drive through a paper mill town?
Yeah, I used to live by one. Remember in South Carolina? The wind blows the wrong way. You're like, oh, what is this? Glue.
But, for sure. Oh, gosh, I'm trying to remember that. It was north of Mount Pleasant when it was between Myrtle Beach, Georgetown, right? Isn't it Georgetown?
I think there's one. Yeah, I forget the name of the company, but Georgetown and then in North Charleston, I think there was another one too. But yeah, they were, it smelled a little pulpy.
It was pulpy. However,
it was fun. Can't win everything.
At least you didn't live there. Right. So that's a good thing. So over 93% of tax returns are filed electronically, which is pretty crazy. 93%. The IRS has been under high scrutiny for their lack of service. Now, they are losing people, but they did answer 20 million live phone calls last year.
That's a lot.
20 million live phone. And the IRS.gov, which is the IRS's website, had 690 million visits, with over half of them being, where's my refund, right? 383 million of the 690 are just people wondering where their refund is. Fascinating. I'm sure we're gonna have a maybe they could put some ads on there or something.
And you know what's funny about that too? That being the number one question that's going in there. I think me and you have done a better job promoting that the IRS actually has a mobile app. At least I know on iPhone. We've mentioned it a couple of times about this. I've never actually seen or heard anything from the IRS saying that, believe it or not. So think about how many calls they may be. Well, let's be honest. I probably wouldn't call them anyways, but they, they got to do a little bit better job of that. But we're happy to help out if they want to reach out. We can give a hand.
So let's talk about enforcement, because there are tons of information in this data book, but what people really want to know is what's going on with enforcement, meaning specifically audits, examinations, right, of taxpayers. So the IRS is currently using, we know that their staff, their funding and their staff and their team count is down, right? and their population of employees is probably more mature aged, if I had to
Mhm.
guess. But the
You're
IRS is
probably right.
continuing to use data analytics, easy for me to say, AI and new technology to enhance their enforcement capabilities. Is what we got to remember is a lot of these forms that you receive are sent to the IRS as well. Could be your mortgage interest statement, could be your W-2, bank interest, a 1099 of one way, shape, or form. So the IRS is doing its best to quickly as possible, using technology and AI and data analytics, match what's on what's called your tax transcript with what is actually filed. Now, not everything, so everything on your tax transcript you should report on your tax return, but there are a lot of things on your tax return that are not on your tax transcript, and that kind of gets challenging when it comes to IRS enforcement.
And I think just on the tech side too, I can think of an example which they're probably going to get a lot better at, right? Is like a scenario where, say, there's two people doing business together, say you're friends, whatever. Somebody pays you, we'll just call, hey, I'm going to give this guy $1,500 for their service in cash. They they document it, they account for it on the outgoing side, but maybe Joe over here is like, oh, I got cash, I don't have to say anything about it uh, in my business. So I'm sure they're going to do a lot better job of matching that it's correct on both sides of the fence, or at least be able to flag it easier, right? So it alleviates some of the manual work.
And these 1099s need to be e-filed now, because before you'd mail them in, it was and W-2s would get mailed in, and it's just come a long way, you know. And
The
if you do
postal
have, I
service is
mean,
going
if
to
you're
take a hit.
listening to this, I'm sorry.
The postal service is going to take a hit.
Oh, they have already. I mean, I was talking to actually one of the attendees from the Minnesota event last week. Uh, was so nice to take me to the airport because she lived near there. And she pointed out, "Hey, there's a post office in the airport before, but it's like a third of the size." And we were reminiscing, thinking, I remember when I first started in this business, I was right in the shift to e-filing. So the early 2000s, where post offices would have the news would be there, of course, and they'd have all the workers out there stamping tax returns before midnight on the 15th, your birthday, obviously, and putting them into the postal service, and thinking, gosh, that doesn't happen anymore.
It'd be like tax day, quote unquote, air quotes again, tax day. Tax day sponsored by Band-Aid for the paper cuts for those
Exactly. Hey,
poor
they probably
postal
needed
service
some.
people.
Oh man.
Times
So
have
let's talk
changed.
about these audits. All right.
Yeah.
A friendlier way to say is examination. But IRS audited 605,000 individual tax returns last year. 600. Now that sounds like a lot, but that really only made up 0.38% of all the filed returns. Pretty
Right, which is
interesting, huh?
and I think that's the important number there is the percentage, right? Because we get asked that a lot. I feel like at every conference we go to, real estate ones especially, people are like, "Oh, is that gonna increase my audit risk?" Like, that's the infamous question, right? And I believe, like, your response always is, We don't really know what that is." I mean, there's certain things you can do that are, like, almost guaranteed red flags, but, by claiming a home office does not automatically increase, uh,
Correct.
audit risk, correct?
Correct. I mean,
I want that to
you
go
have
on
to do it
record, by the
properly.
way, that's the second thing that I've pulled out in reference
Right.
that
Hey,
is
almost as impressive
substantial.
as depreciation recapture. So the
Right.
additional tax recommended from these audits, right? And we're not saying that the tax is actually due. If you are audited, you have a right to appeal it. You have a right to talk through it. But the IRS's additional tax recommended on those 605,000 audits of individual returns was $7.1 billion. That's an average of about $11,700 of additional tax recommended per audit. Now, I'm sure there are people out there that got assessed millions and millions of dollars. There's people that got assessed a couple $100, but it's just interesting. So less than a third percent of filed returns on the individual are actually examined, with the average of about $11,000 assessed. I kind of, so that's interesting. Now, let's talk about business returns, right? Business returns, 38,057 returns were examined. Those are S corps, C corps, etc. $15 billion of taxes recommended, right? So 1/20th approximately of the returns examined, but double the tax assessed recommended. The average is about $400,000 per business. Now, it could be skewed, right? You could have one corp that owes billions and $1 billion itself. But I'm just saying, as we look at that, and then partnership returns, only 13,200 approximately partnership returns were examined. That's Form 1065. That's less than 1/10 of 1% of those returns. So if you think about pure audit risk for an LLC, we're not suggesting you are a multi-member LLC, but if a multi-member LLC has a lower audit risk than a Schedule C, meaning a sole proprietor.
And here's
But
kind of
yeah,
a loaded question for you, and more of your opinion on it. So those partnerships, right? We're seeing a low number there, right?
Mhm.
Is there a reason why that may be? Like, are they kind of forced to keep their stuff more in their books more in order or something? I
Right. I mean, yeah,
just
like
guessing.
partnerships, the vast majority should be reporting a balance sheet. They're typically going to have more sophisticated accounting. Uh, and they're going to issue K-1s, and partnerships don't pay federal tax. However, if there's an adjustment to the partnership return, then individuals might have tax on that. So
I wonder if these examiners too have like, you remember the Staples easy button where you like smack it and it says something? I wonder if they have something like on their desk and it's like a gotcha button when they're getting like, bam, just got an
you know
extra
what? I don't.
$1 billion. So
My impression is, and I don't do a ton of representation work, but my impression is that they are just like everyone. They're trying to move cases along their desk. They get one slapped on their desk. It could be targeted. It could be an analytical thing. It could be just a random. Sometimes the IRS says, hey, we want to have a sample size. So we're just going to go audit a random 100 returns with one thing on it just to see if we see trends. And they're looking. And if they don't see some bad stuff, then they stop looking and they might assess. If they start seeing really bad stuff, so they dig deeper. So what I want you to think about is when you get audited by the IRS, usually what happens is you just got pulled over going maybe five over now, if the IRS comes to your car, you don't have your seatbelt on, you've got a beer open, you're drinking, you've got illicit drugs in the back, you've got stolen weapons, you've got, you have a warrant out for your arrest, it can go bad quickly. So you just have to work with them and give them what they need.
that's a great,
If
I
you're
think you've
examined.
pulled out a couple good analogies today. I know
Once
we
in a
had one of
while,
them. We were talking before. That again is a really, really good one. And I think the importance of you saying it in that way is, even though we joke about the IRS and the gotcha, like we don't want to, was it like villainize or vilify, whatever that word is? Like they're not bad people out to get you, right? A lot of it, like you mentioned, is kind of a systems that they're working through trying to find things because otherwise, how would they find it, right? Like they
Mhm.
might find an area code that people are claiming, I don't know, home office deductions, and the average house is 1,000 square feet, and they're all claiming 15, something crazy like that, right? Like, I'm sure that's how they find it. So yeah, that was a great example. Like the only reason you got pulled over is because they're looking for something potentially,
Right?
not saying
Could
it's
be the
you, but they're
seatbelt
looking
rule,
for.
and then all of a sudden it
Yeah.
gets out. So let's talk about examination rates by income. The data book gives us some indication of an estimated audit rate for 2024, and some of this is surprising. So the less than $25,000 income folks are at about a 1% audit rate, which is 5 times more than people that make 25,000 to 100,000 and 10 times more than people that make 100,000 to $500,000. Like why would the less than $25,000 people, I'm going to put this little caveat in there, that has an earned income tax credit. So there's a lot of fraud, unfortunately, in the earned income tax credit world. And for that reason, about 1% of those are examined. About one out of every, 0.2%. So if you think about it, one out of every, what, one out of every 500 returns are examined at the 25,000 to 100,000, and one out of about every 1,000 returns, the 100 to 500,000. 500,000 to $1 million, probably about 0.6%. And then $1 million to $5 million, about 1%. And then if you're over $5 million of income, it's about, somewhere between 5 and 10%. We don't know the exact number, but that's the estimate.
Right. And looking at that all spread out too, we'll put the link to this PDF for this year in the show notes here. And if it's still out there, we'll put the one for last year too, if anybody wants to reference it. But I mean, really, that makes sense when you look at that as a comparison table, right? Once you get over was it 5 million plus? Was that last one where it's kind of a
Yeah.
targeted number?
Of income, yes.
It makes sense, right? Because those get very complex, I'm sure. And there's a lot of things, not saying things are done maliciously every time, but things can slip. It is what it is. And I give him credit for going that route, I guess, really.
Well, I'm going to wrap up by talking through audit, because when we think about audits, many of us think like you're going to get some random person knocking on your door, right? So the IRS has what they call correspondence audits. That means they mail you a letter, and if you get that, we have content about what the heck you should be doing. You should definitely talk to your tax professional immediately if you get that letter. And typically it's targeting one item, right? Or they have what they call field audits or in-person audits. Now, that doesn't mean that they're going to your house. Those audits are typically going to be conducted face-to-face, and they're typically going to be, in general, at an IRS office. You can absolutely hire an enrolled agent, a CPA, or an attorney to represent you on your behalf. And that's typically what happens. The correspondence audits are about 85 to 90% of all the audits. And then with the in-person audits or field audits, only about 10 to 15%. And most of the correspondence audits are focusing on the lower income taxpayers when they're really looking at that earned income tax credit, returns with like refundable credits, and just math and verification and documentation errors. Or they might be auditing. We've had clients, they were very generous one year, and the IRS audited just their charitable contribution because maybe they inherited a bunch of money that wasn't taxable and they decided to give a lot to charity. Well, the IRS doesn't know that. So they might have taken a charitable contribution deduction, and they might send them a letter auditing just that charitable contribution. The field audits are going to be those higher income business owners, more complex businesses, international issues, and large Schedule C or self-employed clients. So those are the trends that we're seeing. And obviously when if you're a professional tax preparer, we prepare returns assuming they're going to get audited. We have to be organized. We have to have work papers, because it could be 2-3 years down the road where the client gets a letter and shoot, we could barely figure out what we did a week ago.
Right. Right. And that comes down to too. I know we've spoken it many, many times, when it comes to really choosing a tax professional, right? Find somebody you get along with. I mean, nothing would be worse than, hey, I got this notice of an audit, regardless what kind it is. And, say you don't get along, you butt heads with your tax preparer, tax pro all the time. And they just look at you and say, I told you so. And you'd be like, well, like, what do I do? Like you want to be with somebody that gets you. And the field audits, those are things I know we talked about. These are one of the earlier podcasts we did. I think we referred to the IRS as Darth Vader on that one. But it was the biggest mistake I think that I still take from that is that if you get one of those in the mail, don't open the damn letter. I think it is like verbatim of what our guest Andrew Poulos was saying, right? Like, don't let it sit there and then, oh crap, this was 9 months ago. I'm avoiding it. I'm procrastinating because I think it's terrible news. It could be something as simple as, like you said, what is it, like a CP
2000 is your most common notice. Absolutely.
On record, sir, that's 2 things that I know in your world.
You got hey, you know what? Walk off on a high note like George Costanza.
I'm done, man. I'm gonna do the moonwalk out of my office here in a minute. But thanks for running through these with us, man. I know we're both kind of looking at this data book as we're talking through this. Lots of stuff in there. Honestly, best recommendation I give for somebody on this to make your life a lot easier. Don't print it out. You will kill a small tree. Literally 94 pages. Not to mention, don't kill your prayer. But open it as a PDF. Search in it any keywords you want. There's a table of contents in there. It's actually pretty interesting. Like, even if you're not going into it in the fact of nerding out, there's some pretty interesting stuff in there. You might find yourself digging in deeper than you wanted to. But on this one, I look forward as always to our next show, but I look forward to looking at this next year and kind of seeing how things roll out. But again, links in the show notes. Check that out. 2 other things for you really quick. 1, anybody that's listening or watching this, don't be lazy. Subscribe to YouTube. Subscribe to the podcast. That's one thing. Second, get on defeatingtaxes.com. So that's our private Facebook group for teaching tax flow. We post stuff in there, but it's mostly driven by community members, tons of tax pros, taxpayers, collection of everybody around the country. Get on there and just let us know what you think. Maybe we'll post a couple questions in there, get things started up. I'm kind of curious what people that aren't in this all the time think of this data book, like if they're surprised or how it goes. So, yeah, don't be shy. Post something that you can post anonymously if you want to, but check it out. We do have a great episode coming up, as we always say. Great guest next week as well. Somebody that has a pretty good insight on a couple of things, but you have to wait to find out. So we'll see everybody back here again next week on the Teaching Tax Flow podcast. Different date, same day of the week, completely different topic. Have a great week, everybody.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.